Hi, this is Mike Maloney, and I've got Ronnie Stufferle with me again from Incrementum and a continuing video. So this time, we're starting on page 22 of his In Gold We Trust report from Incrementum AG. And this one is gold priced in different currencies around the world. And what I love about this is, you can go there. There's a site, Nick Laird of Gold Charts R Us has a page where he's got every world currency, gold's performance measured in every world currency. And what you'll find is that with very few exceptions, gold is setting record highs in almost all currencies on the planet. But Ronnie, how are you doing?
Very well. Thank you very much, Mike. How are you?
Good. So let's talk about this chart you put in here, because this is the first time I've seen anybody create a composite of all of those other currencies compared to gold. And it really simplifies it. You don't have to look at 100 different charts. You've boiled down 100 different charts into one. And I love this. Actually, it's not 100 different charts. You've picked more major currencies. So you have 1, 2, 3, 4, 5, 6, 7, 8. You've got 8 of the world's major currencies: the euro, the British pound, the Aussie dollar, the Canadian dollar, the Chinese yuan, Japanese yen, the Swiss franc, and what's INR? Is that the Indian? That's the Indian rupee.
Yes. Yes.
And so you've got those currencies, and you've put them together and taken their average. So this isn't measuring the currencies that are a really small portion of the currency supply. Between these currencies, this is pretty much close to half the world's currency supply. You're talking about a major portion of the world's currency supply. And gold is setting record highs in well over half the world. It's only in the United States that gold is not setting record highs, basically. Tell me about this chart, how you compiled it, and drill down into what it means to you.
Well, for us, it is important to analyze the market breadth of gold. So for some reason, people only focus on the dollar price of gold, while for us over here, it's more important to follow the euro price of gold or the Swiss franc price of gold. While for the bride in India, they don't care about the dollar price of gold. They care about gold in Indian rupee. For Chinese people, they don't care about the dollar price of gold. They want to see it in the Chinese yuan and so on. So we said, first of all, gold is it's traded 24/7. It is something special in every society, in every culture, in every religion. So I think it's kind of odd to just analyze the price of gold in dollar terms, because people tend to forget that roughly 2/3 of gold demand, of physical gold demand, is nowadays coming from emerging markets. So I think we tend to think, Western markets do make the gold price, but actually, emerging market consumption is now really a very, very important driver. But
Go ahead.
Yeah. But having a look at gold in different currencies just gives you more information. And I think, first of all, we've got this world gold price. So gold basically shown in a trade-weighted US dollar. But then also we cover it in various currencies like the ones you mentioned. And I think it is really it's a great confirmation of our thesis. Gold is rising in every currency now. Gold made new all-time highs recently in every currency but the US dollar. And from our point of view, it's not a question of if, but rather of when we will see all-time highs in US dollar terms as well. And I think, once we go above this 1920 mark that we saw, I think, was it late August or beginning of September in 2011? I think this will mean that, of course, the media will pick up gold again. I think this will kind of show us the beginning of a new stage of this bull market, some sort of accelerated stage. And
the blow-off stage, yeah, that's what I've been waiting for.
And
is fond of
just
saying,
one thing,
yeah,
Mike, to add. I don't think that gold is making new all-time highs. I think it's the euro, it's the Swiss franc, it's the Indian rupee, whatever, making new all-time lows measured in gold. So this is the
and
view
you
that
are
we have.
exactly right, because you'd have to measure it, gold, against all of the different stock markets, against all of the different. It's making all-time highs right now. Well, no, it isn't. You'd have to measure it against all of the stuff in society. So you have to measure it against bonds, real estate. You have to take the dollar and the currencies around the world out of the equation to see if it's really making all-time highs. And it still has a long way to move. You're absolutely right. These are the currencies losing value compared to gold. But what I find fascinating here and very reassuring and rewarding, because I've been in gold since 2002, is the table below the chart of how you constructed these graphs. And the table, when you look at the last column of the table, the average, there are only 2 years since 2001 where gold has gone down. Globally, on the average, you've got almost 19 years here. You've got 18 years worth of data. And so 16 out of 18 years, it has been rising in value compared to the average of all these world currencies. This table, you know, and I hate tables. I'm dyslexic. And to me, looking at a chart, I can understand it. It's a picture. It's not words or numbers. But when I look at a table, it's just wallpaper to me. It's just a repeating pattern. And it's hard for me to glean something out of it. But here, you've done things in red and green. And so it's fairly easy to see what years were underperformance. And 2013 was the only year that was straight across the board where gold did a pullback measured in all of the different currencies. But what you see also when you look at the vertical columns, it's the dollar is the one currency that is the worst tool to measure things with. So I'm amazed at it.
And I think going forward, I think the big question that you have to ask yourselves is, do I think that a dollar, a euro, a Swiss franc, an Indian rupee will preserve my purchasing power over the next 3, 5, 10 years better? Or is it an ounce of gold? So this is basically the big question that you have to ask yourselves. And I know the answer, especially with the whole, economic situation, with the debt situation, with inflationism. But I think this is crucial to ask oneself,
yes.
Which currency is...
According to this table, the odds are 18-2, or 9-1, I guess you could say. 9-1. So you got one chance in winning out of 9 compared to, if you're in stocks. If you're in gold, it's the reverse. You've got 9 times the chance of preserving your purchasing.
But I have to add, because when this table starts in 2001, and I wrote my first In Gold We Trust report in 2007, and back then most people in kind of the gold haters, because gold is a very emotional topic and people tend to love it or they hate it. There's nothing in between for some reason. And everybody said, yeah, but it doesn't pay any interest. And, interest, this is this word, I think, young people are not familiar with the concept of interest rates anymore. But, back then, we could say, okay, there's opportunity costs because we've got interest rates. But now and going forward, I'm pretty certain that there
really wasn't opportunity cost. They'll say, yes, but gold doesn't produce an income. It doesn't pay interest. It doesn't have a cash flow. Well, the stock market doesn't either. If you look at the dividend yields on the S&P 500, they've been 1 or below ever since the year 2001. And, if you're talking about back in 2002, 3, 4, 5, 6, 7, it was impossible to convince somebody that gold was actually a smart move. You'd say, I would tell people, you got to buy gold. And they'd say, gold? That's the worst investment you could ever buy. It's been going down for 20 years. And I'd go, exactly. It's been going down for 20 years. Don't you get it? And they didn't get it. It was really something trying to convince people. Once we had that run up from 2008 through 2011, people began to become open to gold, but still the percentage of investors that actually have any meaningful portion of their portfolio allocated to precious metals is absolutely microscopic. There's just nobody out there. When you talk about the major currency in the world, the major currency holders, the people that are the wealth managers and stuff, the amount that's allocated to gold is pretty close to zero. And so there's going to come a day where there's a flood, and look at the average column on that table, and the number of years with double-digit returns and you got to remember that returns, if you have double digits the next year, the compounding effect is huge. When I do a performance chart comparing gold to the S&P 500 or the Dow, the stock markets from the year 2000 are up about 100% measured in dollars, but but gold is up 500%. And so, people still think that stocks outperform gold. No, only in the short term. We've been in this mid-cycle correction from 2011 until today. And that's all I see it as, is a mid-cycle correction. I'm riding through it and using it to increase my position. And this mid-cycle correction, so there's been, like 2013, you've got on here, gold the markets outperformed gold all of these currencies. But that's the only year on here where it outperformed. And so people still, for some reason, think that paper assets are a better place to be. And this chart just proves that paper assets have been a stupid place to be for this entire century. Am I correct there, or what do you think?
Yeah, absolutely. I mean, I think that people, most of the time when I show this chart, they just cannot believe the numbers. And we say, you can check them, they're 100% accurate. And if you have an even longer chart since the 1970s, for example, where we had 80s and 90s weren't the best decades to hold gold. But still, since then, you've got compound annual growth rate of 10.1% in gold. So that's not that bad, actually. And therefore, I think it's kind of odd that people still think that it is a dead investment and it's non-productive and so on. And from my point of view, Mike, I think that gold, there's a place for gold in your portfolio. There's a place for equities. I think there's fantastic companies around, at reasonable prices, and I think always making this competition between gold and productive assets like equities doesn't make any sense. It's like comparing the football, the soccer team in Puerto Rico with the ski team in Austria. That comparison doesn't make any sense. But I think going forward, and I think that's one of the main points that we're making in the report, we show a ratio between the S&P 500 and gold. And actually this ratio made a bottom in Q4 2018. So since then, gold is outperforming equities again. And normally those trends are really secular, long-term trends. And it's not only gold outperforming equities, it's also gold doing well in every currency, as we talked about, and gold is outperforming the bond market. So it's really, how should I put it, a stealth bull market in gold. But the interesting thing is that nobody really cares about it yet, because when I talk to institutional asset managers, they say, yeah, well, gold, it made a move. It's quite interesting. They don't care about mining stocks, for example, and I think one of the major reasons is that they're legally not able to invest in physical gold. Of course, they are able and allowed and incentivized to invest in safe government bonds. But from a
They're
it's
no
kind of a
longer
financial.
safe. I'm
Of
sorry.
course.
There's no such thing as a safe government bond at this point. Go ahead. I'm
but
sorry I interrupted.
but it's for them it's often not possible to invest in physical gold, because of
Yeah.
legal restrictions. They can invest in ETF sometimes, and I think going forward we will see more investments in gold mining stocks, and we already saw that generalists are coming into the market. Have a look at the volumes traded in, the large caps like Barrick, like Franco-Nevada, like Newmont. You can see that there's big money coming into those stocks, which is a sign that this bull market entered a new stage. But I think it's still pretty early. So the party has only started.
Yeah. Okay, so let's move on to the next charts. Milligrams of gold per US dollar and euro. And this goes back to just 1999. If you took this back a century, I think that the currencies, pretty much all of the currencies, I don't think there's any currency there is that has more than like more than 4% of its purchasing power left against gold. Most of them are somewhere down between 96% and 99% for the, if you go back a whole century. So this is just showing. So tell me about the US dollar and the euro in milligrams of gold and what you see in this chart.
Well, it just shows you that the purchasing power of those currencies is constantly falling, and I mean, since the year 1999, that's not so long ago. Seeing the purchasing power of the euro down 83%. And of the US dollar down 84%. I mean, those numbers are just
and that's over
staggering.
20 years. That's just 20 years.
So Clyde Harrison, we quote him, and he said, "Currencies don't float; they just sink at different rates." And I can agree. And I think going forward, as I've said, we shouldn't expect the purchasing power of fiat money to rise significantly. So I think gold will continue to do its job, what it's supposed to be, to protect your purchasing power. And I think gold has shown that over the last decades and over the last centuries. And we wrote at length why this happens, and the stock to flow ratio. We wrote about our monetary system, inflationism, and so on. And I think at some point there will, as my Swiss colleagues always tend to say, they're very diplomatic, there will be a realignment of our monetary system. So, some sort of a currency reform. And I think it's for good reason that the most important players, be it the US, the Eurozone, the Chinese, the Russians, the IMF, for some reason, they've got loads of gold in their vaults. So I think in the process of this realignment of our currency system, gold will again play a major role. And that's probably the point in time when there will be, from one day to another, and this usually happens over the weekends, there will be some sort of a revaluation of gold or a revaluation of fiat currencies.
Yeah, so you said that the currencies they don't float, they all sink at different rates. And this is true. And, I just did an interview with Brent Johnson of the dollar milkshake theory, and he thinks that the debt short position against the US dollar around the world, because there is so much borrowing that happens denominated in US dollars and then converted to another currency and spent somewhere or invested, that is owed back around the world. It's huge. That because that has to be paid off eventually, it means that the dollar he believes that the dollar will rise. I believe that the dollar will rise also. but we've also both been saying there will come a time where gold and the dollar rise simultaneously, because when you're measuring the dollar, the US dollar index, it's measuring against all these other currencies. So if all the currencies are falling at different rates, and for a short period of time the dollar is falling a little bit more slowly than the other currencies, that means the dollar rises against those currencies. But the one thing that's not falling with them is gold. So there is we're going to see a period of time, I believe, where gold and the dollar is rising, and gold will probably be rising faster than the dollar. So this is a very enlightening chart. How much did you say that the euro and the dollar have lost against gold since 1999?
Well, for the euro, since it was introduced as book money in 99, it was 84%, and for the dollar, it was 83%.
In just 2 decades. That is amazing that they would lose that those currencies would lose that much purchasing power. And if you take the fact that gold is up over 500%, that's the inverse of those two figures, 83, 84%. Take the inverse of that, and gold is up 500%. So, okay, I want to thank you very much for being here and going over your amazing In Gold We Trust report that comes out annually. And like I say, this really is a book. It's as much, when I write a book, it takes years to do. And you guys do it every single year. So I want to thank you for all your analysis, what you're doing for the entire sector, and what you're doing to try and help people to save themselves, a lot of times from themselves, but from what's coming, from what the central banks are doing to the major world currencies. Because the whole scenario here does not end well. You would agree with that, right? For most people, it ends well for precious metals investors. We're going to do very well out of it. But I think in general, what the central banks have done is going to be very bad for the world.
I mean, the whole crisis now means, of course, more interventionism, less capitalism, less free markets, and this is something that concerns me. And of course, gold is one of the solutions to those problems and those questions. And I think it's already doing tremendously well. So it protected people from the crash in equity markets this year. So I think going forward, the next couple of years, probably decades, will be quite good for us. But on the other hand, of course, it's also quite saddening, because sometimes I think that I would hope that we've got, sound money, that we would have, not central bankers being like the most important drivers of markets, but like real market forces, and, supply demand being responsible for market action, and not what Mr. Powell or Mrs. Lagarde says next. So, but it is what it is, and we got to make the best out of it. But Mike, I would like to say it is not only me writing the report. It's I'm writing it together with my partner Mark Walik, and we've got a fabulous team of 20 people all together. And without their support and hard work, and we're really putting in lots of love, devotion, sweat, capital into this report, and without our fabulous team, this wouldn't be possible. So thanks to the whole team.
Okay. Well, again, I want to thank you for doing this video with me, and we're going to sign off now. So say goodbye to the audience, and
thank you very much. Take care.
Okay. Thanks, everybody. Bye.